Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is February 10th, 2012 and we are currently looking at price action on our 10-minute chart. And as you can see, of course, the major tone of the day has been bearish. We continued this bearish slide from yesterday throughout the opening of our Asian session, and this bias continued throughout most of the day, and this was due primarily to concerns over the Greek austerity package and whether or not it would be enough to help deal with some of the issues coming out of Greece. And I know we had reports from various EU officials saying that there needs to be more austerity in Greece. And we've also heard news throughout the day mentioning that there was some resistance within the Greek parliament to this austerity package or to this deal. So then right now the market is not too hopeful or confident with what's going on in Europe. So then we see the euro weakening across, in comparison to the US dollar for most of the day. And this bias continued, and there was strong selling pressure and strong US dollar strength. So then this is what happened, and actually the pair fell about 135 pips from the high here at 32.91 down to our session low here at around 31.56 for about a 135 pip slide in the pair. And actually the euro weakened across multiple currency crosses today. So then it was pretty much euro weakness today. That was the theme for today. But if you go back to our Asian Open, you can see that the pair continued its slide and it broke through our daily pivot level here at 32.74, and it continued its slide until it found support here at our 32.40 area, which is actually the 38.2% Fibonacci retracement level on our daily chart. Now let me switch to the daily chart to show you where this level comes from. And I know it can be kind of hard to see, but this last drop here on our daily chart from our high, our October high here at 42.47 down to our January low here at 26.24 formed the 38.2% fib retracement area at 32.44. So we can see right here, this is where we get this 38.2% level from this last drop down on our daily chart. So then let me flip back to our 10-minute chart. So you can see how price fell and it found support here at this 32.40 zone, and it retraced back up and it broke through our daily pivot to reach this resistance here at 32.84. Now if you had a chance to watch the technical analysis video from yesterday, you would have heard me mention about this zone of resistance around 32.84, and you can see it marked by this red horizontal line here. Now if I was to go to the 30-minute chart, and if you glance to the left, you would notice that on February 8th, the pair had tried to test this resistance a few times, but it failed to break through this resistance level. So this proves to us that this 32.84 zone is a good area of resistance. And if you were looking for an opportunity to re-enter into the market to go short again, that would have been a good place to do it. So if you were in front of your monitor at this time, which was around 3 in the morning Central Standard Time. That's the time zone I currently live in. You could have actually placed a short order at 32.80 upon bearish confirmation and held onto the trade until it reached this support at the 38.2% daily Fibonacci retracement level at 32.44 for about a 36 pip trade. So then that was one trade you could have entered upon bearish confirmation. But you could have also decided to hold on to your trade and stick with the bearish bias for the day because there was strong selling pressure for the day, and you could have actually held on to the bearish bias, kept your trade open, and traded this down and took your profit near the support here at 31.57, which is actually the 23.6% Fibonacci retracement level of the recent climb up on our daily chart. Now if I switch to the 8-hour chart, you can see where this level comes from. As you can see, This last climb up on our daily chart from our low January low here at 26.24 to the recent high up here at 33.22 is what formed the 23.6% retracement level here, which we can see in yellow. And I know it can be kind of difficult to see. Let me try to move this over. But you can see how price fell from the high here, and it found support at this 23.6% Fibonacci level at 31.57. So then this area served as good support. So then let me go back to the 10-minute chart. So then if you would have held that trade on from 32.80 down to this support here at 31.57, it would have turned into a 123 pip trade. So then that would have been a lot of a major gain if you would have held on to that particular trade. So as you can see, once price hit the support here at 31.57, it retraced back and found resistance below this 3200 psychological level, and it appeared to consolidate for most of the New York trading afternoon until it began to slide even lower, and right now it's heading into the weekly close and it's heading higher a little bit. But of course, if we don't hear anything over the weekend about the Greek Parliament passing this austerity package and this debt agreement, then we can expect further sliding and a drop in the pair. But if they do agree to it and vote for this debt deal, then we may see a climb in the pair. But only time will tell, and we will have to wait till after Sunday or next Monday to trade whatever happens. But that's it for the technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful evening. Bye.